There's 30 trillion with a T, 30 trillion. Remember, 1 trillion is a dollar every second for 31,710 years. But 30 trillion is going to come into, or that's the total amount of money managed by RIAs and others that is not allowed at this point, for whatever silly reason, to own Bitcoin.
Hey guys, welcome back to Everyday Finance. In this video, Mark Yusko discuss about Bitcoin. Mark Yusko says, "To anyone who's sick, I believe there are more tricks than treats." Before the BlackRock date of 10/17, so any choice prior to that date. This is a bad choice, in my opinion. I doubt that it will be categorically denied, but there will undoubtedly be a push for an extension, and after that, I think we reach the large dog, as I've mentioned several times. Times that BlackRock will be the first. In fact, I've been stating it for more than a year, and I may even go farther and declare that they will be the only ones authorized, but that won't happen since it would be too much, you know? Corruption, well, I'm just stating that it's definitely conceivable. It's probably more likely that BlackRock will come first. Then after that, there was a pause, followed by a few more. But the fact remains that the one who comes in first will receive the lion's share of assets, overwhelmingly. Yes, thus, the first mover will always win. In a way, it's similar to the gold ETF. With the same type of outdated UTF, for instance, the Bitcoin Futures ETF with BITO obtaining 98, and then, a few others are receiving about 1% each. So, that's just my opinion, and in this game, it's much more about who you know than what you know. Many people who ought to have won approved privilege, given that the Winklebosses applied first. They ought to have been accepted. There's no justification for not doing so, other than the manner the game is played, which I appreciate of. So please watch the video to end and share, subscribe our channel Everyday Finance. Thanks.
Now look, I'm 50-50 at this point. So I do think more tricks than treats for anyone who's ahead of BlackRock's 10/17 date. So any decision before that date, I think is a negative decision. I'm not sure it'll be an outright denial, but will definitely be an extension and a push. And then we come to the big dog. I believe, and I've said multiple times, that BlackRock will be the first one. I've actually been saying that for over a year. I actually might even go stronger and say they'll be the only one approved. And be like, oh, that'll never happen. That would be too much, corruption. I'm like, well, I'm just saying that it's certainly possible. Mm-hmm. What's probably more likely is BlackRock first, and then a gap, and then some number of others. But the thing is, whoever's first is going to get the vast majority of assets. Vast majority. Yeah. So
first mover is always going to be taking. I mean, that's just like the gold ETF kind of same kind of
gold
scenario.
ETF was an example with GLD. You had the Bitcoin Futures ETF with BITO getting 98%, and then a couple others getting 1% each. So that's just my belief, and I believe it's who you know in this game, not what you know. There are a lot of people who should have gotten approved, right? The Winklevoss twins were the first to apply. They should have gotten approved. There was no reason not to approve it, other than, again, kind of the way the game is played, and the people in charge want to be in charge. So any new disruptive players, I think, are unlikely. Kathy Wood partnered with one of our portfolio companies, Amun, to do 21 shares. That looked like a great application. Dinged, pushed out. I think Bitwise is a day ahead of iShares on 10/16. As much as I would love it, again, portfolio company, full disclosure, I would love for them to get approved. I just don't think it's going to happen. I don't think they'll be denied. I just think they'll be pushed. and here's why I'm 50-50, Paul, to answer the question, is I think they could approve on the 17th, but I don't think they will. I think they'll push it into next year. So you push 90 days, that gets you into January.
January 15th,
You could push again then into March, April, but that's it. Then you have to approve. Now, what's interesting is we have this little thing called the halving coming up in mid-April of 24. And so it would be an interesting alignment of stars. But I said, could they pull the trigger on BlackRock in a month? Yeah, they could. So I said, I believe the ETF will be approved sometime around year end, whether it's in early January or December, sometime in that time frame. And I think that will pave the way for a very large influx of capital. I know you've had Eric on the show, Balchunas, and he does this great work, right? I mean, there's 30 trillion with a T, 30 trillion. Remember, 1 trillion is $1 every second for 31,710 years. But 30 trillion is going to come into, or that's the total amount of money managed by RIAs and others that is not allowed at this point, for whatever silly reason, to own Bitcoin. And they can't own GBTC and they can't own Bitcoin miners, and they've called a timeout. Well, once there's an ETF, particularly if it's an ETF that BlackRock runs, there's going to be no excuse, and they're all going to have to approve it. Their clients have been asking for it. I would say I have a family harmony account at UBS. They won't let me own anything related to, why? It's my money.
Right.
You should let me buy what I want to buy. And they're like, no. So I think all that goes away. And I think Eric's number is, let's say 1/10 of 1% comes in. That's 30 billion. Well, but wait, 30 billion on 500 billion, that's not that much. Well, no, it's not 500 billion. 400 billion of the 500 billion of Bitcoin's market cap doesn't really trade. It's either locked up like the Satoshi wallet or the Winklevoss wallet, or hodlers that just said, take it out of my cold dead hands. It's only about 100 billion that is the free float, to borrow a TradFi term, and so 30 billion on 100, that'll move the price.
Yeah,
but
for sure.
I don't think it's going to be 10 basis points. I think it's 1%. I think you have to do 1%. As a fiduciary, if you got, 50% in equities at some of the highest valuations in history, and you got, another 30% in bonds, which have had the first 2 negative years in the history of the bond market, 140 years of history, 2 negative years, looking pretty ugly. And you got this asset that is the best performing asset again. Okay, 11 of the 14 years that Bitcoin has been alive, it's been the best performing asset of all assets. It's the best performing asset again this year. Again, I think he's 150 billion would be 0.5%, right? Instead of 10 basis points. And it looks like he's updated his thoughts. I'll go further and say 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. And here's the interesting thing, Paul, is the way halvings work is the fair value increases. So we've got a tailwind that the fair value today, based on Metcalfe's law model that Tim Peterson runs and that I think is fantastic, says that the fair value is somewhere in the low 50s, 52, 53, let's just call it 50. So at the halving, fair value doubles. Well, what do you mean, Mark? What are you talking about? Well, think about it. The miners who secure the network, their costs are fixed, mining machines and electricity. So if their block rewards, the number of rewards that they're paid to secure the network, gets cut in half and the price doesn't move, then they're out of business. So there's a built-in mechanism to move the price higher, which is actually really interesting because that attracts attention because there's movement. And so long story short, fair value, every halving, has added a zero. So we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we go from 10,000 to 100,000. So if fair value is 100,000 and we're trading at 26, it's a pretty rapid increase to fair value, I think, as investors buy things that are below fair value. But then what happens in the fall, post-halving, you get this parabolic blow off top. And in the previous cycle, fair value was around 30K. We got all the way to 69.
Right.
That was because there was too much leverage and too much gambling and speculating. I've been saying this for 5 years. My hashtag get off zero is the wrong number, right? This is a truly unique diversifying asset that must be in everyone's portfolio. Okay? It doesn't have to be your whole portfolio. I never said that. It should be at least 1%. I'll argue 2 or 3%, but 1%'s fine. And had you done that a decade ago, okay, had you taken 1%, half from stocks, half from bonds, 1%,
for sure,
put it in Bitcoin, your portfolio would have done two things. It would have compounded at about 250 basis points per year better with less volatility. So it reduces risk and adds return. It's the perfect diversifying asset because it's 0.0 correlated to bonds and 0.15 correlated to stocks. And look, Markowitz won the Nobel Prize for a reason. CAPM works. When you add diversifying assets with reasonable levels of volatility or even high levels of volatility, if they're highly uncorrelated, your portfolio becomes more efficient. And so as a fiduciary, you can't not have this asset, particularly if now there's a ETF by a trusted brand. So retail, many of them have abdicated that day-to-day responsibility to their financial advisor in a good way, right? Most people shouldn't manage their own money. I don't mean it's a bad thing. It's just that's not their specialty, right? They're nurses or construction workers or financial managers or whatever it is. That's not your day-to-day thing. And it didn't used to be that way, right? In the good old days, you worked for a company and you had a pension and they had a professional manager that took care of the money and you got a defined benefit for the rest of your life. And then they schnookered us by saying, hey, we're going to change the rules and we're going to make it portable and defined contribution. Well, that was just a gift to corporations because they had to spend 30% less to fund their obligation. Went straight to their bottom line and into the manager's pockets, and they thrust that responsibility on the individual. The average individual doesn't spend the time or have the knowledge to manage their portfolio. And it's not a criticism, right? I'm not a great chef. I shouldn't try to cook my own food, right? That's not my expertise.
Sure.
I should go take advantage of other people's expertise. I am a financial manager. I take care of people's assets. So I do think that the average investor will be very well served by having a good RIA, registered investment advisor, a good financial advisor who will say, I gotta put 1%.
Yeah, let's go that direction.
Again, that's not even a big number. If we got 2 or 3%, Katie